Wall Street's secret? This ETF pays you for holding AMD stock. Today we're cracking open a can of something a little different. It's called the AMDY ETF, and let me tell you, it's got income seekers and AMD fans buzzing. This bad boy doesn't just hold AMD stock, it uses fancy option strategies to potentially generate monthly income for you. Sounds sweet, right? But before you jump in, there's a whole lot to unpack. We're talking fees, liquidity, and some hidden risks you need to know about before you invest. So buckle up, because in the next few minutes, we're gonna dissect the AMDY ETF and see if it's really worth your hard-earned cash. Plus, we'll explore some surprising alternatives that might be a better fit for your portfolio. Stick around. We'll be right back after the break. Question 1. What is AMDY ETF? The AMDY ETF, or Yield Max AMD Option Income Strategy ETF to give it its full name, is an actively managed exchange-traded fund, ETF, with a unique twist. It doesn't directly invest in shares of companies, but instead focuses on a specific stock, Advanced Micro Devices, AMD. Here's a breakdown of how it works. Income generation. AMDY aims to generate monthly income for investors by selling, or writing, call options on AMD stock. Essentially, AMDY grants contracts to other investors giving them the right, but not the obligation, to buy AMD shares at a predetermined price by a certain date. When AMDY sells these contracts, they collect a premium upfront. This premium is the income that gets distributed to AMDY shareholders. Capped AMD price gains. There's a trade-off here. While AMDY generates income, it limits potential gains from AMD's stock price appreciation. If AMD's stock price goes up significantly and surpasses the predetermined price set in the call options contracts, the option holders will exercise their right to buy the shares at the lower price from AMDY. This means AMDY misses out on the full growth potential of AMD's stock. Actively managed. Unlike some ETFs that simply track an index, AMDY is actively managed by YieldMax. This means fund managers are making decisions about which options contracts to sell and when. Their goal is to balance income generation with some participation in AMD's potential price growth. Here's an analogy to understand AMDY better. Imagine you own a rare baseball card. AMDY is like selling someone the option to buy that card from you at a set price in the future. You get some money up front, the premium, but if the value of the card increases significantly, you miss out on those extra gains. Key points to remember about AMDY. 1. Focus on income. AMDY prioritizes generating monthly income through option writing over maximizing AMD stock price appreciation. 2. Capped gains. Investors give up some potential upside in AMD's stock price for the benefit of regular income. 3. Actively managed. Fund managers make decisions about option strategies. Question 2. What is the investment objective of the AMDY ETF? The AMDY ETF has a two-pronged investment objective, prioritizing one over the other. Primary objective: generate current income. The core function of the AMDY ETF is to deliver regular income to its investors. It achieves this by employing a strategy called covered call writing, specifically on shares of Advanced Micro Devices, AMD. Here's how it works. Selling call options. AMDY sells call options on AMD stock. These options contracts grant the buyer the right, but not the obligation, to purchase AMD shares at a predetermined price, strike price, by a specific expiry date. Collecting option premiums. When AMDY sells these call options, they receive a premium upfront. This premium represents the income that gets distributed to AMDY shareholders on a monthly basis. Secondary objective, limited AMD stock price appreciation. While income generation is the priority, AMDY also seeks some level of participation in AMD's potential price growth. However, this participation comes with a limitation. Capped gains potential. If the price of AMD stock increases significantly and surpasses the strike price set in the call options contracts, the option holder has the right to exercise their option and buy the shares from AMDY at the lower strike price. This scenario results in AMDY missing out on the full potential gains of AMD's stock price appreciation. In essence, AMDY prioritizes generating consistent income through option writing over maximizing potential gains from AMD's stock price. Trade-off between income and growth. There's a fundamental trade-off at play in the AMDY ETF strategy. Higher and more frequent income. By selling call options, AMDY generates a steady stream of income for investors. However, the income potential is capped because if AMD's stock price surges, the option holders will likely exercise their right to buy the shares at the lower strike price, limiting AMDY's profit from the stock's appreciation. Limited capital appreciation. Investors sacrifice some of the potential upside in AMD's stock price for the benefit of regular income. Question 3. Is AMDY intended for a core strategic allocation or a tactical play on a specific market segment? The AMDY ETF is likely better suited as a tactical play on a specific market segment rather than a core strategic allocation. Here's a breakdown of why. Core strategic allocation. A core strategic allocation forms the foundation of a long-term investment portfolio. These holdings are typically ETFs or mutual funds that track broad market indexes, like the SP 500 or the total stock market. The goal is to achieve steady growth over time through diversification and capturing overall market returns. AMDY ETF as a core allocation, less ideal. Limited growth potential. AMDY's focus on income generation through option writing restricts its ability to fully participate in potential price appreciation of the underlying asset, AMD stock. This could hinder long-term growth within a core portfolio. Actively managed. Unlike core allocation ETFs that passively track indexes, AMDY is actively managed. This means its performance hinges on the ability of the fund managers to consistently generate income through option strategies, which can be less predictable than market returns. Tactical play for specific market segment. A tactical play involves using investments to target specific market segments or capitalize on short-term opportunities. Here's how AMDY aligns with a tactical approach. Income generation. AMDY caters to investors seeking a steady stream of income, potentially appealing to those looking to supplement income within a portfolio. AMD market exposure. AMDY offers targeted exposure to the AMD stock market segment, potentially benefiting those with a bullish outlook on AMD's future, but wanting to hedge against major price swings. AMDY's strengths as a tactical play. Income potential. Provides a way to generate income within a portfolio, potentially attractive in a low-interest rate environment. Hedge against downturns. The income generated by option writing can help offset potential losses from AMD's stock price decline. However, consider these potential drawbacks. Lower long-term growth. Compared to a core holding, AMDY may underperform in terms of long-term capital appreciation. Active management risk. The fund's reliance on the skill of the managers to implement option strategies adds an element of risk. Question 4. What is the expense ratio of the AMDY ETF, and how does it compare to similar ETFs in the same asset class? The AMDY ETF has an expense ratio of 0.99%. To understand how this compares to similar ETFs, let's delve into expense ratios and analyze AMDY's position within its category. Expense ratio explained. The expense ratio is an annual fee charged by a mutual fund or ETF to cover its operating expenses. This fee is typically a percentage of the fund's assets under management, AUM. It's important to consider the expense ratio when choosing an ETF because it directly impacts your investment returns. A lower expense ratio translates to a higher portion of your return staying invested. AMDY's expense ratio compared to peers. Unfortunately, there isn't a universally defined asset class for ETFs that focus on option writing strategies like AMDY. However, we can compare it to two potentially relevant categories. Covered call ETFs. These ETFs employ a similar strategy of selling covered calls to generate income. While a direct comparison might not be perfect, it can provide some insights. Actively managed technology sector ETFs. Since AMDY offers targeted exposure to the technology sector through AMD and is actively managed, this category can also be a reference point. Here's a breakdown of expense ratios. AMDY ETF, 0, 99%. Covered call ETFs. Expense ratios for covered call ETFs can vary but generally fall within the range of 0. 30% to 1. 20%. Some examples include Nationwide Risk Managed Income ETF, NRMI 0, 60%. Invesco SP 500 Buffer ETF, SPBU 0, 94%. Actively Managed Technology Sector ETFs. Actively managed ETFs tend to have higher expense ratios compared to passively managed index-based ETFs. The expense ratios for actively managed technology sector ETFs can range from around 0, 75% to 1, 50%. Some examples include ARK Innovation ETF, ARKK 0, 75%. OT. Row Price Global Technology Fund, PRGTX 1, 00%. Analysis. AMDY, compared to covered call ETFs, AMDY's expense ratio falls within the typical range for covered call ETFs. AMDY, compared to actively managed technology sector ETFs, AMDY's expense ratio is on the higher end compared to some actively managed technology sector ETFs, but lower than others. Question 5. What are the top holdings of the AMDY ETF, and what percentage of the portfolio do they represent? The AMDY ETF operates differently from most traditional ETFs. Unlike ETFs that directly hold stocks or bonds, AMDY focuses on option writing strategies and doesn't hold a significant amount of company shares as its core assets. Here's a breakdown of AMDY's holdings. Focus on option contracts. AMDY primarily holds cash and short-term U.S. Treasury bills or notes. These holdings serve as collateral for the option writing activities. The majority of the fund's portfolio is dedicated to selling call options on AMD stock. Limited transparency on specific holdings. Due to the nature of its strategy, AMDY doesn't publicly disclose the specifics of the option contracts it sells. This includes details like the strike prices and expiry dates of the options. Why limited transparency? There are a couple of reasons why AMDY might not disclose specific details about its option holdings. Dynamic strategy. The option contracts sold by AMDY likely change frequently based on market conditions and the fund manager's decisions. Disclosing specifics could make it easier for others to copy their strategy, potentially reducing its effectiveness. Protecting the fund's edge. Revealing the details of their option strategy could give away their tactics to other market participants, potentially reducing their ability to generate income for AMDY shareholders. Question 6. How often does the AMDY ETF rebalance its portfolio, and what factors drive the rebalancing decisions? The AMDY ETF likely rebalances its portfolio continuously as opposed to a set schedule. This continuous approach is due to the dynamic nature of its option writing strategy. Here's why. Focus on options. Unlike traditional ETFs that hold underlying assets, AMDY focuses on selling call options on AMD stock. These options contracts have expiry dates, typically ranging from weeks to months. Expiry triggers rebalancing. As each option contract approaches its expiry date, it falls out of the AMDY portfolio. This creates a need to rebalance by selling new options contracts to maintain the desired level of income generation. Dynamic market conditions. The effectiveness of AMDY's strategy relies on adapting to changing market conditions. This might involve adjusting factors like strike price, the price at which the option holder can buy AMD stock from AMDY. Expiry date, the time frame for which the option contract is valid. Number of contracts sold, the quantity of options sold on AMD stock. Factors influencing rebalancing decisions. The fund managers likely consider several factors when deciding how to rebalance the AMDY portfolio through new option contracts. Market volatility. In periods of high volatility, the managers might adjust strike prices and expiry dates to manage risk. AMD stock price. The current price of AMD stock influences the attractiveness of selling calls at specific strike prices. Desired income level. The managers aim to balance income generation with potential participation in AMD's price appreciation. Limited public information on specifics. While rebalancing likely happens continuously, AMDY doesn't publicly disclose the specifics of each rebalancing decision. This includes details like the exact timing, strike prices, and expiry dates of the new options sold. Question 7. What are the risk factors associated with investing in the AMDY ETF, including market, sectoral, and geographic risks? The AMDY ETF offers a unique income generation strategy, but it comes with its own set of risks. Here's a breakdown of the market, sectoral, and geographic factors to consider. Market risks. Equity market volatility. AMDY's income generation relies on selling call options on AMD stock. If the overall stock market experiences a downturn, AMD's stock price could decline. This can negatively impact AMDY's income generation potential from option premiums. Interest rate fluctuations. Rising interest rates can make fixed income investments like bonds more attractive. This could lead investors to move away from AMDY, potentially affecting its liquidity and share price. Sectoral risk. Technology sector concentration. AMDY's focus on AMD stock exposes it to the risk specific to the technology sector. If the technology sector underperforms the broader market, AMDY's returns could suffer. Disruption and innovation. The technology sector is known for rapid change and disruption. New technologies or competitors could negatively impact AMD's business, potentially affecting AMDY's income generation and share price. Geographic risk. Concentration on a single company. AMDY's reliance on AMD stock exposes it to the risks associated with a single company. Any company-specific issues at AMD could significantly impact AMDY's performance. Geographic concentration. AMD is a U.S. company. Political or economic instability in the U.S. could affect AMD's business and, consequently, AMDY's performance. Additional risks. Option strategy risk. The effectiveness of AMDY's option writing strategy hinges on the skill of the fund managers. If the managers make poor decisions about strike prices or expiry dates, it could reduce income generation or even lead to losses. Lower long-term growth potential. By focusing on income generation, AMDY might miss out on some of the potential upside from significant price appreciation in AMD stock. Mitigating the risks. Diversification. Consider including AMDY as a part of a well-diversified portfolio to reduce concentration risk. Investment timeframe. AMDY might be better suited for investors with a shorter-term investment horizon due to its focus on income generation. Understanding option strategies. If you're unfamiliar with option writing strategies, it's crucial to do your research before investing in AMDY. Question 8. What are the current macroeconomic trends or events that may affect the performance of the AMDY ETF's underlying assets? The performance of the AMDY ETF, which relies on option writing on AMD stock, can be influenced by several current macroeconomic trends and events. Here's a breakdown of some key factors to watch. Interest rates. Rising interest rates. The Federal Reserve is expected to raise interest rates in 2024 to combat inflation. This can make fixed-income investments like bonds more attractive to investors. If investors move away from equities due to rising rates, it could lead to a decline in AMD's stock price, potentially impacting the option premiums AMDY generates. Economic growth. Global economic slowdown. Concerns about a global economic slowdown due to factors like the war in Ukraine and ongoing supply chain disruptions can create market volatility. This volatility could affect AMD's stock price and the income generation potential of AMDY's option writing strategy. Technology sector performance. Demand for semiconductor chips. AMD is a major manufacturer of semiconductor chips, a crucial component in various electronic devices. The continued demand for these chips, especially in areas like artificial intelligence and data centers, can positively impact AMD's stock price and benefit AMDY. Supply chain issues. The ongoing global supply chain disruptions can affect AMD's ability to produce and deliver its chips. If these issues worsen, it could lead to chip shortages and hinder AMD's growth, potentially impacting AMDY's performance. Geopolitical events. Trade tensions. Trade tensions between the U.S. and China can disrupt the global supply chain and impact the technology sector. This can negatively affect AMD's business and potentially harm AMDY's returns. Additionally, consider these AMD-specific factors. New product launches. Upcoming product launches for high-performance computing chips or graphics cards from AMD can generate excitement in the market and boost its stock price, benefiting AMDY. Competition. The technology sector is known for fierce competition. If major competitors like NVIDIA release new products that outperform AMD's offerings, it could negatively impact AMD's stock price and AMDY's performance. Question 9. Are there alternative ETFs or investment vehicles that offer similar exposure with potentially better risk-return characteristics or lower fees? Yes, there are alternative ETFs and investment vehicles that offer similar exposure with potentially better risk-return characteristics or lower fees, depending on your specific investment goals. Here are a few options to consider. Alternatives for income generation. Covered call ETFs. These ETFs employ a similar strategy of selling covered calls on a basket of stocks, often focusing on specific sectors or the broader market. This can provide a more diversified income stream compared to AMDY's concentration on a single company, AMD. Some examples include a nationwide risk-managed income ETF, NRMI, expense ratio of 0.60% and offers income generation through covered calls on a basket of U.S. blue chip stocks. Invesco SP 500 Buffer ETF, SPBU, expense ratio of 0.94% and offers a combination of covered calls and put options on the SP 500 index, aiming for income generation with some downside protection. Dividend ETFs. these ETFs invest in companies with a history of paying regular dividends. While the income might not be as high as with covered call ETFs, dividend ETFs can offer a more sustainable and predictable income stream. Some examples include SPDR/SP Dividend ETF, SDY, expense ratio of 0.7% and tracks the SP High Yield Dividend Aristocrats Index, focusing on companies with a history of increasing dividends. Vanguard High Dividend Yield ETF, VYM, expense ratio of 0.6% and offers broad exposure to U.S. companies with high dividend yields. Alternatives for technology sector exposure. Technology sector ETFs. These ETFs provide diversified exposure to the technology sector, including companies like semiconductors, software, and internet. This can offer some of the growth potential of AMD without the concentration risk. Some examples include Vanguard Information Technology ETF, VGT, expense ratio of 0.9% and tracks the CRSP US Large Cap Information Technology Index. iShares Expanded Tech Sector ETF, IGV, expense ratio of 0.7% and offers exposure to a broader range of technology companies globally. Technology Mutual Funds. Actively managed technology mutual funds can offer exposure to the sector while potentially outperforming the broader market through selective stock picking. However, these funds typically have higher expense ratios than ETFs. Alright everyone, so we've dissected the AMDY ETF and learned it has a unique approach to generate income through option writing on AMD stock. It offers some potential benefits, but also comes with its own set of risks like concentration on a single company and potentially lower long-term growth compared to traditional stock ownership. The AMDY ETF can be a suitable option for investors seeking a specific income stream and some exposure to AMD, but understand the risks involved. Remember, diversification is key. We explored some alternative ETFs that offer income generation, technology sector exposure, or both, potentially with lower fees. No matter what path you choose, do your research and make sure it aligns with your investment goals. If you have any questions about the AMDY ETF or the alternatives we discussed, leave a comment below and let's chat. Don't forget to like this video and subscribe for more deep dives into unusual funds.